In the meantime, Fox Business exclusive. When are all of us going to feel some type of difference here? Scott Hodge is the president of the Tax Foundation. We're so glad to kick off 2018 with you, but we need to know right now, what will be the first signs and the first feel that the tax plan is helping people out there?
Liz, we're looking at a couple of different things, but first and foremost, really durable goods orders. The new tax bill has not only ushered in lower corporate tax rates and lower tax rates for small businesses, but they've moved toward full expensing, immediate write-off of capital investments. So we're looking to see how businesses start off the new year by ordering new equipment, new delivery trucks, new servers, new computers, and all of that. And that's going to translate into the providers, the equipment manufacturers and so forth, having to ramp up their production. And all of that's going to happen, hopefully, in the next couple of months.
I know you experienced this because I had more people calling me and asking, everyone telling me, my accountant called me and said, I need to do this and I need to do that. But there is one thing that I am hearing will be an extraordinary wave, and that will involve people immediately converting to pass-through businesses. They're going to say, you know what, pay me in my LLC, pay me in my business so that I get that lower tax rate that the pass-throughs are going to get. What's that going to do to revenues?
Well, you got to be really careful about that because the new tax bill puts in a lot of guardrails to protect or prevent that kind of behavior. They were very worried that you'd have accountants and doctors and lawyers and architects changing their wage income into business income in order to take advantage of those lower rates.
Why not?
So they carved those people out. So make sure that you do check with your accountants and your tax lawyers to make sure that you are eligible and you're not part of that excluded group of businesses that they just don't want to allow that lower rate.
Well, on your screen are a whole bunch of companies that said they were going to give bonuses. Now, we also hear that everyone from Goldman Sachs to other businesses are having to write big checks to the government, sort of one-time tax checks, billions of dollars. Are we to see that as a negative or a positive?
Well, I think it's just a cost of transition in moving to the new tax system. And, you know, we got a lot of things on our old books that we're going to have to clean out. That's why a lot of companies, multinational companies, are going to have to pay extra tax on the foreign earnings that they haven't brought back to the United States. And that's all part of clearing out the old tax system and moving toward the new one.
Scott, one last question, because we talked a lot about carried interest, the so-called loophole that the very wealthy private equity billionaires get to take advantage of legally. It did not go away as the president had promised, and Congress somehow left it in. You have actually calculated how much revenue carried interest would bring in, or what it does, and how it would be affecting us if it were eliminated. What is the number here? Because I've seen numbers all over the map.
We estimate it was about $2 billion a year in new revenue, or about $20 billion over a decade. And you know, in sort of the grand scheme of things, it's not a huge amount of money, but it's really symbolic. And as you say, whether you're allowing these fat cats on Wall Street to get a lower tax rate, where those of people who are working on wage income have to pay the higher rate. A lot of people do just see it as a fairness issue. And
do you?
Congress?
Because I do.
I do, absolutely. There are guys on Wall Street working for salary who are paying a 35 or 39.6% rate, while the other guys at the hedge funds are only paying 20%. That's simply not fair.
Well, Scott, you agree with us. I like it. Thank you very much for joining me. Happy New Year.
And Happy New Year to you.
Scott Hodge of the Tax Foundation. Good stuff there.